Welcome to Global Tax Talks Tax in 60 Seconds. I'm Will Morris, and here are some things to watch out for in the coming week. First, expect to hear more about the UK budget. The tax rises of £40 billion are the headline, and much, but not all of that, fell on business. Changes to the UK employer social security or national insurance contributions, the rate went up, threshold going down, dominated much of the headlines and is by far the biggest tax increase. There is, however, some concern about the impact of this change. As a tax on employment, it could adversely impact employment levels. There was also a modest rise in tax on carried interest and capital gains, including on the sales of businesses. There was some compensating news, however, on new investment and a stabilisation of the R&D incentives regime. But as I've said several times before, many governments have very little leeway to stimulate growth when budget deficits are so high. It's a really tough balancing act. Also, just to note, the UK announced that they will make amendments to its Pillar 2 legislation to maintain alignment with the OECD's ongoing work and confirmed its plan to enact the Pillar 2 UTPR with effect for accounting periods starting on or after December 31. In other Pillar 2 news, the European Commission has proposed so-called DAC 9, which aims to facilitate the exchange of Pillar 2 top-up tax information between member states and allow MNCs to switch from local to central filing. If adopted, this would allow businesses to file a single top-up tax information return in one EU country instead of multiple filings across the EU. Other than for small EU countries that have postponed Pillar 2, this implementation of the OECD Globe Information Report would have to be enacted into law by December 31, 2025, with the first returns due June 30, 2026, and the first information exchange required by December 31, 2026. Finally, according to news stories from Brussels, the European Parliament Fisc or Tax Subcommittee has drawn up a work plan that would focus on two potential reports. The first would aim to suggest a coherent tax framework for the EU's financial sector. Second, and in line with the Commission's announced decluttering programme, another report will be looking at the role of simple tax rules and tax fragmentation in European competitiveness, seeking to tackle remaining tax barriers to cross-border investment, cross-border business, and cross-border workers and self-employed in the EU. And it will also look at the impact of national tax incentives on the fragmentation of the EU tax framework and make suggestions to simplify EU tax rules. In an interesting Brussels dynamic with these reports, the Fisc subcommittee clearly wants to get ahead of the Commission, as Ms von der Leyen's letters to the incoming commissioners and the Draghi and Letta reports cover the same topics. Anyway, businesses should definitely consider feeding into this process as and when opportunities arise. Thanks for tuning in, and come back next week so that you stay global tax ready.